Welcome back. Hope you're having a good morning. Well, as promised, Anuj joins us in the studio to run us through a quick trade setup for today. Hi, Anuj. Morning.
Morning, Nigel. Well, you know what? I'll just look at an indicator that I track on my own about whether the market's in euphoria or despair phase, and that's the number of stocks at new highs. And in that, what you'll find is while there's only 232 stocks at new 52-week high, within that, what's interesting is that it's Group A and Group B that dominate. 89 stocks and 74 stocks. That's good news. Only 69 stocks from the perceived bad quality space that are at 52-week high. Tough luck if you are in those 4 A group and B group stocks which are at 52-week low. I mean, really in this market. But I mean, the market's fine. Absolutely. This number, when it starts to go to 500 plus, is when you start to get worried. But that's not the case. This morning, Gautam Dugat sent me a very interesting report, and I must say that, I spent about 20 minutes reading that fascinating report. Why is India outperforming? And, there's 3 or 4 reasons. GDP growth of 7.2% in FY23. That's the macro reason. Of course, with inflation and interest rates also peaking out, external balance also quite robust and stable currency. That's the macro. On micros, what's interesting is that after a double-digit earnings growth in FY23, FY24 on high base could see almost 15% earnings growth, and that's mainly because the commodity prices have collapsed, and that's going to lead to a big margin uptick in India. It may not be top-line driven, but it could be EPS driven. I think that's something to keep an eye on. And of course, the return of FI money. You've seen 70,000 crores in last 3 months, and absolutely no signs of euphoria if you go by the primary market, where the action is nowhere near FY21. But that's of course for the longer term. Talking about near-term setup. One number that I had presented yesterday as well was this FI long-short chart. And yesterday, there was 10,425 long build-up that you saw in the market. Now I'm coming to trade setup. We should change it. The FI exposure is at 73% in index futures. And we have crossed 1 lakh contracts at 1.02 lakh in terms of the net contracts. The Nifty futures premium, though, came down. That's good news. But the put-call ratio is high at 1.48 versus 1.37. The template for the market is very simple. Buy every dip and keep trailing your stop loss. And then was one last point. Keep an eye on IT stocks today, especially mid-cap IT. Going by what the US data is showing, the US economy is still very strong. And my sense is that IT stocks from here on could actually deliver good returns, even though Q1 could be soft. And especially mid-cap IT, I think that could be the flavor of the day today.
Okay, Anuj, thank you very much for that. Let's